In this video, traders, we're going to look at common limit order mistakes. Stick around. Hey guys, warm welcome to you. Thank you for joining me. Okay, so these are, I think, are common limit order mistakes. I made all these, as with all this stuff I share with you guys. Hopefully you can learn from my mistakes in my almost 20-year career in the market. I kind of see a lot of things that I see the sort of commonalities of some of the mistakes traders made and some of the tips and ways that they can overcome them. So, limit orders, very, very powerful. I'm a big fan of limit orders, and we're talking limit orders here in terms of take profit orders. So a take profit order on your trade. Let's use long as an example to keep it kind of consistent. You're long on a trade, you've got a sell order at a certain level. So that's what I mean when we're talking about this. Obviously we flip it if it's going short. So some of the common mistakes we have are an all or nothing approach. So what I mean by this is, very often if the market, it kind of hits your limit or it doesn't, it's a binary event. And in reality, this is something that we've kind of gone into a lot more depth before in another video, but I want to touch on it now. If the market's approaching your limit and is sitting, let's say, using the analogy of day trading, kind of 15 pips under your target, and your stop's still right under there, 80 pips, all of a sudden you've changed that risk reward ratio on the trade a lot more. And so one way to look at it is not necessarily I've got to get that price or nothing, but more of a marker of how price is behaving. And if price is stagnating just under your limit order and it's been there all morning and there's no real sign of it kind of pushing higher and you don't feel like there's any volatility there, then I think it's okay at that point in time to move down and take the fill, or you observe the price action, you go, hey, this looks like it's building a base ready to drive even higher. Let me move the limit higher. Let me recognize that there's more opportunity here, there's more juice in this trade, and let me incrementally push that limit order higher. That's something else you could do rather than all or nothing. It's got to hit it. It's a profitable trade or it's not. Be a little bit more of a kind of zone-based approach. I'll be a little bit more flexible with things. Not necessarily, there's a fine line, guys. As with all trading, it's a balancing act, but all or nothing can activate you, get you a little bit frustrated as well when you're not getting filled. A common thing as well is moving the limit lower. So if you're long, a lot of people will kind of look and go, it's not going to be filled, and the fear of it not being filled and the fear of giving back profit and the fear of it being a losing trade is the predominant emotion, and you then take a decision based on that short-term emotion, which we know is never that good, and you end up moving the limit lower to make sure that you get filled. And of course, if you do that, you're kind of messing around with the whole thesis of the trade in the beginning. The third thing, guys, is not splitting the order up. A big proponent of scaling. I feel that you don't have to. The trade doesn't always have to go from your point that you want to that point. There's different checkpoints along the way. Trade might get 2/3 of the way there, then come back, and so splitting that order up and saying, hey, this is a key level. I think for us to break that today might be a bit of a kind of big ask for this instrument. So I'm going to take off half at that level, and then tomorrow maybe you look for a bit more of an extension, and so you split your limit order up, and so you kind of taking some off the table, you're taking some more off the table, and you're looking for further targets if possible. You're looking for those kind of early resistance levels that are going to be tough to break through, and don't necessarily request that the market does that immediately to make it a profitable trade. So split the order up a little bit. The fourth thing is checking the market too much. Common thing, this, guys. You may be doing this as well, especially with mobile phones. You're out and about. What's the market doing? I'm in a position. What's it doing? What's it doing? What's it doing? What's it doing? Oh, it's coming up. Oh, it's coming in my limit. I'll take it. And that's a common thing. So you don't have to do anything, guys, but I'd recommend something that works for me is to be very structured about when you check the market. Do you check the market during specific times of the day? That's a much better way of doing it. So maybe just after the US Open, if you've got a European index position, what's the US done? Give it an hour, 3 o'clock UK time. Let's have a look, maybe just before the close. All these times, and if your limit's been filled, great. Another little tip to do, guys, is to, if you can, have an alert set on your limit. Now, some brokers will allow you to set an alert when the order is filled. Others, you might have to put a kind of alert on your chart, and that feeds your limit's been done. And if you need a hack and see a broker doesn't do it, use something like TradingView or another free charting platform. Put your alert in and under your limit at the point you'd be filled, and then it's kind of a proxy of getting around the fact that you're not getting alerted by a broker. But most brokers will do it, and what that does is that means you're not thinking, I wonder if I've been filled. I wonder if I've been filled. Because unless you've had the alert, you haven't been filled, so you don't need to worry about it. All you do is check it at that particular time to reevaluate the trade. Your 15-minute reevaluation period. I'm checking, it's doing okay. It's holding a little bit there, that's fine. Do I need to adjust the limit higher? No, I don't. Am I happy with it there? Yeah, fine. It's a much better way of approaching things. A final one, guys, is setting unrealistic limits. So this is a super common one as well. I've fallen into this trap myself, and it's something that I'm very mindful of to this day. You know, you want the price to go here, right? You say, that's a great 5R trade, I'm gonna do that. But in reality, if the average range of the day on that instrument is, you know, a fifth of that, asking for that on one day is super unlikely. You know, you've got to look at the probability and the way the market's trading. So, you know, setting that really unrealistic limit, expecting it to do that in one day, is just, you know, you've got a chance of doing that after 2% or something, and you get frustrated when you don't get your limit and you're kind of trying to run the trade and it comes back. You've got to look at the market ranges, the market conditions, the market rotations, the expectations of that market, and then align your trade with that. You can't just determine, hey, I want this and that's it, and that's the risk reward that I want on the trade, and I want that by this time, because the market won't give it to you. The market only give you what it's doing. If it's oscillating around a 50 pip range all day, looking for 150 pips is not out of the question, but it's unlikely. Whereas if you're looking for, say, 40 pips and you feel like you've got the bottom of the range, that's super likely, because if it's the bottom of the day and it's pushing back up, you're going to get filled in that. So, you know, setting unrealistic limits is super common. So just kind of trying to align yourself with the ATR is a good tool to use for that, with the daily range, the first 15-minute range, this kind of stuff. So you get a real good feel for where's a sensible place for your limit, where's a good place for your limit. Another thing is, let's say you've got a 30 pip higher limit, you've got a kind of fixed risk reward ratio, and that happens to be just above a breakout level, then why not bring it a little bit lower and go, okay, well, that's more likely to be filled, or way higher to take advantage of the breakout rather than just above it, so that you're kind of in this no man's land position. Take it before, so if it just tags off that you're filled, take a little bit less, a few pips less, or move it significantly higher to allow for the breakout and extra juice from the breakout. So sometimes you've got to align yourself based on the key levels as well. Anyway, guys, common limit order mistakes. Hope that's helped. See you next one. Take care. Bye bye.